Hi guys and welcome back to another Trade of the Week video. So as always, Monday morning comes and our head trader Oliver Davis posts the weekly market watch list on our education centre. So down we go, education centre, you know the drill, market watch list. And there we are, view here. So weekly market watch list 18th to the 22nd of November 2019. So as always, we're going to talk a little bit about what we're expecting this week in terms of the fundamentals, and then we're going to scroll and have a little look at some of the currencies that Ollie has lined up. So we had a quite quiet week. Sorry, it's a bit of a tongue twister. Until Wednesday, and this appears to be the typical theme, with the back end of the weeks becoming more fundamentally heavy. We have some really clean price action developing across multiple currency pairs, which we'll look into. So let's just continue trading. We haven't got many trading weeks of the year left, and hope that the fundamentals align with our analysis. There's not a huge amount happening regarding the dollar, other than the FOMC meetings on Wednesday. So we're not looking for much market movement these days, but don't be complacent. But we do have PMI data out this week, which usually can provide a good insight into economic feel from the floor, as we were. And the PMI is rated out of 100. Below 50 is bad and above 50 is good, and that's what counts. So the hawkish move from the RBNZ last week as well, they didn't end up reducing the rates, so it might offer some good opportunities to build on New Zealand dollar strength, because they didn't make the move that we expected them to. And also a lot of people expected them to, and this is an important thing with fundamentals. A lot of you, on the face of it, when you're new to trading, will think that a fundamental impact will have an immediate effect. But come on guys, a lot of the big banks, they know this stuff way before that we do, or they do so much analysis that they're pretty adamant on what the decision is going to be based on past trends. So a lot of the movements are actually already priced into the market. So when something goes against, such as a New Zealand dollar, there would have been a reducing rate price into the market. So now that's why we're looking for the opportunity to build on New Zealand dollar strength. But again, don't rush into positions. It's Monday morning. We've got loads of nice setups, very prevailing for us for this week with high probability. And as Ollie said nicely, it's important for you to keep yourself very level-headed, patient, have your emotional control and money management on point, as a mindset of your constant mindset as a trader. But it's even more important when you're coming to the end of the trading year. So let's have a random scroll this time and see what we're going to have a look into, purely because if you want the full watch list every week, every Monday, just subscribe to IYF on our website, iyftrading.com. It's very affordable. You can get a membership for £39 a month, and this is just one of 8 products that you'll be receiving under our education centre. So scrolling down, let's go for the dollar Swissies, where we've landed. So despite invalidating the bearish sequence, it would now appear that downside is more probable for this pair. Although it's not exactly clear, we can apply our correlation knowledge from euro dollar and the DXY, which both provide more quality and clarity in terms of direction. On the 4-hour, shorts from here do come with higher risk, as prices failed to breach the previous swing lows. The safest way to approach this would be to wait for a clear break below the previous low if you're looking to go for short positions. CAD Yen, so price has now retraced into an area of high value for us, which is our structure in 50 EMA per the strategy that we teach at IYF. And since this, we've seen a bullish bounce off of the 50% Fibonacci level, as you can see here. And we're anticipating a further leg side following from the current corrections. We're looking for the CAD Yen on the daily to move further. Now it's bounced off of the 50% fib and shown strong support there. On the 4-hourly, so following from the higher time confirmation with confluences around the 50% fib, we can now start building a case. Notice the corrective nature of the descending channel into the 50% level, followed by an impulsive breakout closing above the 4-hour 50 EMA, as you can see here. This is the 50 EMA. It's close above there, and of course it's bounced off at 50% fib. So long position should be considered upon any pullbacks into one of the fib levels. So if we see a pullback down into say 61.8 or the 50% level, we'll be then looking to go long again from that position. So that's the ideal entry for CAD Yen. Scrolling down, Euro Yen. So we've been tracking this pair for a while now, and we have correctively made our way into the first buy zone now. We have now rejected the 50% fib and previous structure, with price printing a massive bullish engulfing, closing above the daily 50 EMA again. So as you can see again, guys, there is a current trend here. We're looking for certain currencies based on the strategy that we teach at IYF. It's a very simple strategy to understand once you've gone through the education, and it's a very, very effective strategy as well, as you guys will see from our expert traders portal results. And it's the same strategy applied to the CAD pairing above. So again, due to the high time confidences around the 50% fib, we can now start building a case for this. Notice the descending channel into the fib level, followed by an impulsive breakout closed above the 4-hour 50 EMA. Long positions should be considered again upon any pullbacks into the fib level. So there's no point rushing into it. If we see a pullback of around 50 pips, we're in a good way to enter a trade on 38.2% fib. Patience, get your buy limits in on the Euro Yen and of course the CAD Yen as well. 50-60 pip pullbacks to start the week after the last week's bullish trend, and we're back in the game. Pound dollar, very quiet, not very many good trading positions of recent times, but we're back here. We're looking at it and analysing it, seeing what we can do the rest of the year off of GU or cable, commonly known as. So weekly, really clean price action for this pair, which is surprising. So following from an impulsive move breaking above the descending TL and 50 EMA, we've had several weeks of consolidation as we witness this correction unfold on the weekly time frame. As we approach our first area of high value, 1.27, around the 38.2 level on the fibs, we should only be looking for reasons to go long, as we have multiple confluences to support a potential fantastic swing trade. So you've got to remember, guys, as well, in terms of the price, like 128 is so low for cable. Even this time last year, or around 14 months ago, we were seeing the pairing at around the 140 level, so it's very low and it's taken a battering from Brexit. But look, we could really catch this into a lovely, fantastic swing trade, as Ollie has noted, and we do have some really clean chart movement to suggest a long position here. So on the daily, because that is the weekly for GU, as we've mentioned above, we remain the alert, as well as alert as possible as the price is approaching the 38.2 level, which will be at around the 127 mark. And on the daily, weekly 50 EMAs, they're lining up with that too. So if we do breach the structure around the 127, we should pay attention as price retraces deeper and approaches the TL, which is here. So we have to keep an eye on that, but there's definitely long positions around the 127 level that we're thinking is going to be a good entry for the GU. So yeah, there's 4 analyses for you. We normally go through around 12 or 15 pairings on our weekly watch list, but that's just giving you a little insight into what we're looking to do, especially with yen longs and potentially a GU long as well, if the price is reached or the ideal price in this week. So have a great week, everyone. Stay safe. Remember, manage your emotions, manage your risk, and everything else will manage itself.